Everybody hates Germany.
No, they don't. I mean, that's a pretty good looking chart.
Yeah, they don't now. But
Huh?
I guarantee you people are not super long Germany. I guarantee you.
No, I'm
So
curious about that because
compare it
there
with
was
Spain, EWP.
EWT.
EP is in Paul.
Because I thought that this rallied in the Rheinmetall. Europe has to
Yeah, but
defend
then
itself.
a lot of defense sold off a bit.
Yeah,
You know, because
Rheinmetall's rolling
yeah.
over.
Yeah. So, but so look at Spain. I mean, that's been more of a monster than Germany.
I've
Those
been wanting to
huge
say this.
last year.
I've never been to Spain, but I kind of like the music. Three Dog Night too for all my youngsters out there. Uh, no, this is the kind of chart that I like. Staircase charts, and this looks more akin to that than the South Korea, which is a rocket ship.
Right.
This is staircase, and what I like about that is that when they correct to the bottom of the prior staircase. When they violate that staircase, to your point, Charlie, is when I get concerned. I don't get concerned if they just pull back, nice and pretty like this into the prior staircase. Especially look at the volume down here. That's pretty positive volume. So that trend is up until further notice, in my opinion.
And then back to the Germany. What are you thinking about that one?
I'm surprised it looks as good as it does, given the weight of the defense companies in the index, which I haven't looked at recently.
They have
But
auto, they have banks, like
yeah,
insurance, they have a
this
lot of
is
stuff,
this is this
right?
is, this is awesome. This is the pre financial crisis, and look at that. Touched it here, touched it there, touched it
Yeah.
there, and broke above it. And so now, pulling back to this
At
36
Siemens.
level would make some sense. But that's a decent breakout. That's a decent
Yeah.
breakout.
And they had to get past like SAP bombed, right? That's a big one.
Yeah.
Siemens is in there. Allianz, which actually didn't have such a great report today. But Siemens Energy, nice. DT, but you're right. Rheinmetall's, maybe like 4% of the index. Deutsche Bank, Deutsche Post, like, there's a lot of names in there when you're looking at it. But Germany itself, just for those who are, interested, some of the biggest sectors, really industries, are insurance is about, just shy of
Yep.
14%. All kind of manufacturing, software, a lot of that's the SAP, right? But they've got a little bit of machinery, telecom, auto. I mean, aerospace defense only 5.8%. So,
And
yeah.
notice what you're not saying. You're not saying technology, by and
Right, and
large.
so, like, when
By
you're
and large.
thinking about what could continue to go up, if things improve, right? When if fundamentals improve from hated levels, I think that those are easier bets in this kind of market. Just when we're talking to people about where could opportunities be, right? Where could they be?
Yep.
We like that kind of stuff. So,
You
I
know,
know we're
Hey,
getting
just
long here. Go
does
ahead.
Germany
Final
qualify as
notes.
a halo trade? That's the new acronym
makes
that everyone.
sense. That makes sense.
Yeah, I mean a little bit. I mean SAP would be a not that, right? And that's one of the large things there. But it does make sense from European industrial type approach, right? So it'd be a bit of a halo. But you have to believe that their economy is doing better. Like we own some real estate in Germany. We own some like some of the industrial and energy utility type names in there. That's what we like about it. A little bit in financials too,
Hey,
but just
Nadine,
trying to own
just
out
for
of it. Yeah.
new
Yeah.
listeners, viewers, yeah, who is we if they want
Yeah.
to look you up?
Oh, we is Solstein Capital. So we
Okay, I'm just
do
I
global
want you.
investing, and half of what we do is ex-US for big institutions, and half of it
Okay,
is global cross-asset for, call it families. It can be institutions or individuals, and so we have to know about the macro trends, but also have to care about not just making money, but comparing it to how the market's making money. And so
right.
there's two things we want to do is we want to, well, I guess maybe three. One, we do want to make money, but two, we want to be able to do better than a benchmark. because otherwise someone could do it. And we want to get our returns in a different way than the benchmark. So last year, we just had our a big meeting with one of our large client pension clients, and we got there in a different way. Like we had gold stocks, and we told them in January what we were going to do the whole year. We had European defense, we had gold, we had EM, we had a lot of things that ended up doing well last year. You can't always get all those trades kind of right at the beginning of a year, but that's what we were trying to do, is not be in the trade that everybody else was. So
Yeah.
because otherwise, like, why would they give you money if you're just doubling the bet of an index? They might as well just put leverage on stuff and do it. You really need to, I think a little bit differently. That's all.
I like
So
it.
what is the trade this calendar year? I'll give you a year that no one else is in right
Well,
now.
we
Is
don't
it your
give that out. I
industry?
actually, so my clients know, but I don't give that out in the air. So I'm really careful about
Okay.
that, because sometimes we are building positions, and like we are right now, we bought some stuff yesterday. But I'm giving you a hint, giving you little hints today, right? Giving you some hints today.